gold is superior and blockage of the Strait of Hormuz.
Do you think that we can get a refining industry up and running quickly, or are we too late? Welcome, everyone. I'm your host, Tiger Stacker, and today we have coming back for his second interview, my guest, Jesse Day. Please keep in mind, we are not financial advisors, and this is not financial advice. This is for educational purposes only. Please do your own due diligence and with anything you decide to put your hard-earned money into. Jesse Day is the host of his own successful YouTube channel, Commodity Culture. He has done such a bang-up job on his channel as well as the first interview here. Therefore, it's an obvious choice to have him come back. Jesse frequently says he wants you all to be successful in your investment strategies. Certainly, I endeavor and wish the same for all of you as well. He has a varied interest in the commodities sector, including precious metals, but he is also very astute with geopolitics and the expat community. So without further ado, I want to welcome back to the show, Jesse Day. Welcome, Jesse.
It's great to be here, Tiger. Happy to dive into a bunch of interesting topics once again.
Yes, me too. While looking for new subjects to talk about, I was intrigued by the information in the many interviews you had. On our last interview, we had a great time talking about silver and gold and your stacking strategies. My channel focuses on the established stacker and information for the newbies. Most stackers live by the phrase, if you don't hold it, you don't own it. However, you do more vaulting. You also do more in the paper markets than most stackers. And you've been successful at it as well. For the interest of both the newbies and the seasoned stackers, would you care to elaborate on your investment style?
Yes. So obviously I'm a physical first type of investor. I believe that for anybody out there, before you start delving into the paper side of things, whether that's ETFs backed by physical or whether that's mining stocks, you need to have some amount of physical gold and or silver. Some of it should be directly in your possession, but once it gets to a certain point, depending on where you are in the world, depending on what your security situation is, and depending on the quantity of metals that you have, I think that vaulting with a trusted counterparty is something that could be a possibility as well. Again, it's up to everybody's own individual preference, but I look at physical gold and silver as the ballast of any portfolio. And that's not there to make you money. That's there as an insurance policy. And ultimately, I think the main goal is to remove wealth from counterparty risk in terms of not trusting, because when you've got fiat currency in the system, you're trusting both your banking establishment and the government who issues that fiat currency. So you've got two different counterparties in that situation. Physical gold and silver in your own possession is obviously the best way to go. And then if you have excess metals you need to vault, you obviously need to be very careful about where and who you're choosing to vault it with. And that also depends on the quantity of the metal as well. But once you have that established foundation of physical gold and silver, then you can go ahead and speculate on the mining shares. At least that's my own personal approach. I'm not recommending what anybody do here, but my own approach when it comes to the mining stocks is I'm also quite conservative there. I look to ETFs and streaming and royalty companies as the main instruments through which to access the mining sector. Now, royalty and streaming involves a company that essentially funds gold and silver mines. It's used in the oil and gas space. It's done in other minerals and other commodities as well. It's not exclusive to precious metals, but essentially these companies fund mining operations in return for either in a streaming case, a percentage of the metals produced, which they buy at a very, very low rate. And then they go ahead and resell that into the market. And I believe with royalties, they actually get access to a certain percentage of a certain amount of that gold or silver sold from the mine. So the reason why that business model is so compelling is because the royalty streamer doesn't take on nearly as much risk as an individual mining company would. Typically speaking, if they're a larger gold and streaming company like or royalty like Wheaton Precious Metals or Franco-Nevada, they have so many different streams or royalties all over the world in different jurisdictions, different geological settings. And so they take on very little risk in terms of issues at one mine will have a very small impact on their larger portfolio. Now, that being said, Franco-Nevada did run into some trouble with their stream at the Cobre Panama mine in Panama, a large copper mine that got shut down by the government. I won't get too deep into that, but they had a very large stake. That their royalties were kind of perhaps overweighted into that one particular project. And at that time, their share price took a massive hit. So it's not a completely risk-free business. You have to look at things like that, but it is kind of the superior business model because they're not worried about increases in energy prices, more capex needed. Basically, they don't fund anything beyond what the agreement they sign at the beginning of their stream or royalty is, and they simply pay that amount to the miner. And of course, they do the good companies do their due diligence to make sure that the companies they're providing royalties and streams to are either in production already or have a very clear pathway to production and to be profitable. And they can take huge advantage of that without taking on as much of the risk. So it's kind of a way to have a really big diversified basket of mining stocks under one umbrella. So I really like that model. And then of course, ETFs will hold a basket of miners. So I use the GDXJ, that's the junior gold miner ETF. But of course, you could also use the GDX. SIL is the silver miner ETF and SILJ is the junior silver miner ETF. So that's a way to lower your risk by investing in a diversified group of miners as opposed to trying to get into the weeds and look for that, one or two companies that are going to be a 10 bagger, because the truth of the matter is in the mining industry, failure is the rule, not the exception. And even projects that have super attractive economics on paper can run into all sorts of issues. And we've seen that around the world in recent times. I mean, perhaps the most recent and stark example is Vizsla Silver having several of their employees executed by the Mexican cartel. That's about as stark and as brutal as it gets, but that kind of underlies the type of risk that exists out there. And so by diversifying these miners through ETFs or royalty streaming, you're less exposed to those sorts of single company risks. So that's my overall approach to the precious metal sector.
Yeah, you made some very good points, especially with Mexico and the cartels. I have a little bit of investment in Vizsla Silver, and they've lost a lot of employees because of the cartels recently. So I appreciate you bringing that up because that certainly will play a part of that particular company.
This channel is affiliated with ARC Silver Gold Osmium. The owner, Ian Everard, is one of the most honest bullion dealers in the United States. ARC Silver Gold Osmium's owner, Ian, advertises new stackers to start their portfolio in the exact order he named his company. First, starting with a base of silver, then based upon the individual's plans and abilities, progressing to gold. Although he is the first dealer of osmium in the United States, he recognizes that osmium is not for every stacker or collector, and he does not advise this for everyone, but it is there for the stacker or collector who is interested in additional metals, including osmium, platinum, palladium, and others. ARC Silver Gold Osmium has some of the best prices that you can see here and on his website, noted in the QR code and in the description below. You can also call for pricing and purchasing and take advantage of his specials today by reaching out to Ian at 307-264-9441 or by email at ian@arcsgo.com. And make sure to tell him, of course, that Tiger Stacker sent you.
Are you more of a silver bug or a gold bug? And which metal would you suggest for the newbie or the established stacker with limited funds?
Well, silver is how I got started on this journey. Again, because at the time when I first got involved in precious metals, I didn't have much capital to deploy. So in that case, it was certainly the poor man's gold adage proved true. And it was really holding that first silver coin in my hand that woke me up, because I think there's an evolutionary psychology that exists in all of us because of gold and silver's multiple thousand-year history as money. When you hold it in your hand, you kind of get that this is true wealth. So that's how I started my journey. So I would say, perhaps I'm more of a silver bug in that sense. However, silver is far more volatile and far more speculative of an asset compared to gold, largely driven by its industrial demand. And many would say because of the paper manipulation plays a big role. That's not something I'm very well versed in, but I recognize that it exists. And particularly in silver, many experts point out that it's perhaps more pronounced than it is in the gold market. However, when it comes to gold, that is kind of the ultimate insurance policy. The one thing I would point out is there's not any central bank stacking silver. I mean, part of that is because of just the massive amount of space it takes up, which is another consideration for stackers as well. One of the issues I ran into with silver was when I relocated from Canada to Croatia, I had to sell some of it because it was simply too heavy to carry overseas. It was going to take up too much weight in my luggage, and I was trying to travel as light as I possibly could. So for those people to maybe consider, when you're stacking silver and you do so over the course of many years, and suddenly you have this massive stash in your basement or wherever you keep it, you have to consider the logistics of that should you ever choose to relocate or need to move your wealth around the world. So in that sense, gold is superior in terms of its portability. And it's also where all of the big institutional money is going, whether that be things such as, I believe it was Morgan Stanley's CIO, who now started to recommend that investors allocate 20% of their portfolios to precious metals, a 60-20-20 as opposed to the traditional 60-40 portfolio, whether that's central bankers around the world, central banks and governments who have been accumulating gold at a rapid pace, whether that's the Basel III regulations, which now allows banks to carry gold on their balance sheet as a tier 1 asset. The signs around the world that gold's role as money is being reestablished are many, and silver will certainly follow. And the move we've seen in silver, I believe, was largely driven by the gold market as well. And we will see more of a move in silver, in my opinion. It moves higher and faster, but that works both to the upside and to the downside. And so if I was to choose only one metal as a long-term store of value, I would choose gold, but I think everybody should have some silver as well.
That's good to know. I especially keep plus or minus about a 50-50 by dollar value portfolio. And it's certainly a little easier to try to reaccumulate it if you sell it, because like you said, it is the poor man's gold, even with today's prices.
Yeah.
Since silver is being used more and more for energy, such as solar panels and electric vehicles, this now gives me a chance to segue into another area that you are heavily involved in, which are the energy markets, particularly oil and gas. Solar panels and electric vehicles can be very expensive, and the U.S. has not got the infrastructures to support electric vehicles at this time. Where do you think we will be with fossil fuels such as oil and gas currently, and for how long, and especially in today's environment?
Yeah, very timely question, particularly with the closure or the not necessarily official closure, but the blockage of the Strait of Hormuz and Iran holding that area hostage and not allowing most ships to pass through. I mean, there was all this speculation on how can Iran close the Strait of Hormuz. Well, all they need to do is what they've been doing. Blow up a few ships, damage a few ships, make it known that they're going to be hostile to any U.S. or Israeli allied ships going through the area, and then insurance companies will no longer insure these vessels. And so, or the cost of insurance will skyrocket so high that it no longer becomes economical to traverse through the region. And so we've certainly seen that put a major squeeze on energy prices as we see oil where it sits today at $95 a barrel. It was only recently $60 to $55 to $60 a barrel. It skyrocketed past $100 a barrel, since come back down, but it seems to be settling here in the 90s, which is a massive, massive move in a short amount of time. Now, nobody wants to profit from tragedy, but if these prices continue, oil and gas companies will be printing cash, selling at these prices. So it's an interesting situation because the danger on the other side, and obviously this is not a danger for the world. It's good for the world if somehow peace were to be achieved and Iran was to reopen the strait, and U.S. and Israel and Iran would stop attacking all this different energy infrastructure, and we go back to a world where this isn't happening. We could then see oil plummet back down into the 60s. Now, I think the fundamental setup for the oil and gas sector was already very strong. We saw a lot of the oil and gas equities already on the rise so far in 2026. Before this event occurred, the price of oil was already ticking up. And that's for a number of reasons. I mean, the industry's been so underinvested in. A lot of big institutions got out due to ESG mandates and these types of concerns. And a lot of people believed that oil was going away and that we were going to turn over to an era of electrification. Those of us who were paying attention to the situation know that this isn't possible. And so that's a big reason why I've been investing in the oil and gas sector, because these equities have just been so cheap. They've been beaten down. They're paying very large dividends, a lot of them. They're buying back shares. They're paying down debt. And so you essentially get paid to sit around and wait for the oil price to go up, which has now happened in a dramatic way. Now, how sustainable is a $95 oil price? The issue is that the higher the price of oil goes, the higher the price of everything goes, because energy is the main input into the economic engine of the world. And so, we were talking a little bit about food prices before we hit record today. And the cost of oil going up will increase the cost of food, because energy inputs required to manufacture that food or to grow that food will go up. The cost of transportation of that food will go up, and everything in the economy runs on energy. And that's largely fossil fuels still today. So at $95 oil, people will start to feel the squeeze even more than they already are. And people are already having a hard time making ends meet due to all the inflation that's been going on. So that's my main concern for society at large, especially if we even see oil prices spike above 100 again into the 150 range. Iran threatened that they'd take oil prices to $200 with their actions. I don't know if that's going to happen, but if we see oil consistently above 100, that's going to put a real squeeze on the consumer. And if they stay high enough for long enough, that's eventually going to destroy demand to the point where we could see the price come down on the other side. As is often said in the commodities market, the cure for low prices is low prices, and the cure for high prices is high prices. If oil stays too high for too long, you start to see people driving less, people going on less vacations, people consuming less and being more careful about, the types of products they're buying and consuming, the types of, people. We've already seen the airlines ETF. It's called JETS. It has absolutely collapsed in the aftermath of this war starting. There's a cruise line ETF that has also collapsed, because that's reflecting expectations. We're going to start to see less of these types of discretionary spending going on with oil prices at these elevated levels. So that's kind of my current assessment of the situation right now.
That's very interesting. In fact, I was going over this whole issue about where the oil products out of the Strait of Hormuz is going. I did a piece on it, but it wasn't quite so accurate, and looked into it a little bit further. It looks like most of the oil products out of there goes towards Asia. But despite that, everyone, including yourself and basically my gut, tells me that the prices are going to continue to increase as long as this war goes on, even though most of the oil products go towards Asia. Very little comes here.
Yes. Well, at the moment, the U.S. is one of the largest energy producers in the world. It's been the number one exporter for several years running now. However, that could also be starting to change, as a lot of oil analysts, a lot smarter than me, have been projecting that we are starting to see production roll over in the large U.S. shale fields, such as the Permian Basin, the Eagle-Ford, and the Bakken. And we're starting to see decline rates increase for oil and natural gas in those areas. And thus we're starting to see it become less economic to drill wells. You need a much higher oil price sustainably to do so. Now, with these prices, we could, if they are sustained, we could also see additional production come online in these big fields in the US, because some of them need a $60 to $70 WTI to be able to be profitable. You could even then look at drilling some more previously uneconomic wells, stuff in the $80 range, if we do see oil go above 100 consistently. So that will bring on a little bit of marginal production. But the overall trend, from my understanding in the United States, is that oil production is starting to roll over in the major oil fields. And so the thing about that is that when there is a decline in oil fields, it declines much more rapidly than it increased originally. So when you see the rates drop off, it's rather dramatic dramatic in terms of the amount of the lessening of the amount of production that you can extract from these wells. And so we could be in for a bit of a shock as well on two fronts if that rollover of production in the US starts to accelerate and make itself even more apparent. And we also have the situation in the Strait of Hormuz. It could be putting a double squeeze, so to speak, on oil and gas prices.
It's a good analysis. I appreciate it. Thank you. So let's segue again into a different area involving energy, an area that you are exceptionally well versed in, uranium. I've dabbled in uranium royalty and uranium energy core. Previously, you've mentioned URNM, but also you understand the intricacies of uranium. Would you like to tell the listeners about this wonderful radioactive metal?
Yeah, I mean, it's one of the greatest asymmetric bets to the upside currently that exists in the commodities market. I think there's probably nothing I'm more bullish on than uranium moving forward. Now, as I think I mentioned before, and as people have to keep in mind, we've been in a uranium bull cycle for around 5 years now. We've had peaks, we've had troughs, we've had a lot of volatility. It's an extraordinarily volatile sector. So that would be the word of caution that I would put out there. We're not at the beginning. I don't think we're close to the end of this bull cycle, but the really best time to be buying uranium equities was in 2019, 2020. But I think that as we see, this volatility can also be taken advantage of. And the reason why I believe uranium is such an attractive opportunity at present is a simple supply-demand story. We are already in a deficit. There is not enough uranium being pulled out of the earth today to service the existing reactor fleet. The long story is, and I won't ramble too long, but post Fukushima, this was, the Fukushima nuclear disaster. It wasn't as much of a disaster as the media made it out to be, but the meltdown of the one of the reactor cores and the evacuation of the area when a tsunami hit, triggered by an earthquake. One particular nuclear plant, it was, I think, Fukushima Daiichi, and that obviously caused Japan to then overreact and shut down its whole nuclear sector. It also sent fear throughout the world, causing a lot of other countries to pledge, well, we'll never use nuclear because it's so dangerous, and caused them to shut down their reactors, cancel reactors planned and under construction. And this left a large inventory overhang, above ground inventory overhang. And in addition to that, there was a megatons to megawatts, that's what it was called, a program post-Cold War, where the Soviet Union dismantled a bunch of its nuclear weaponry and converted it into fuel for nuclear reactors. That also created a large supply impact. And because of all of these events converging, uranium was very cheap for a long time, and people kind of wrote off the sector as dead. And then it started to come to life around 2018 to where we are today, where the entire zeitgeist has reversed on nuclear energy. Now, the same types of people who were saying nuclear is so dangerous, it's going to destroy the planet, are saying nuclear is the only solution to achieving net zero and to bringing about this green, clean energy future. Now, I think we need all energy sources, including oil and gas, including coal. It's much more intricate than what the politicians standing at a podium would have you believe. But nuclear is now accelerating nuclear build-outs around the world. China's leading the charge on this. Massive nuclear build-outs. Russia's building nuclear reactors for other countries around the world. UAE's on board. India. India just recently signed an agreement with both Canada and Kazakhstan to purchase massive amounts of uranium from both countries as a sign just of how much this fuel is needed in the future. And This is a trend that is not going anywhere. It's only accelerating. So the thing about uranium that makes it simple is it's very easy to understand the supply-demand dynamics, because uranium has one use: nuclear fuel in nuclear reactors. There's no other fuel that these reactors could use. People talk about thorium and some other things. That's decades away from commercial adoption, if ever. So right now, and for the foreseeable future, uranium is the only thing that can fuel nuclear reactors. And with not only the reactors that exist at present, a lot of them are getting their lives extended, and a lot of new ones are getting built and are planned to be built moving up ahead. And I think we're just waiting for that absolute mania phase. I think a lot of these equities and the price of uranium itself will skyrocket beyond what most people expect. And so I think uranium is just a great place to be right now. And you mentioned URNM, that's an ETF put out by Sprott that that once again holds a basket of uranium miners. It's more heavily weighted towards the majors, Cameco and Kazatomprom, as well as the Sprott Physical Uranium Trust, which is another vehicle, probably the lowest risk vehicle for people to get access, because that is simply buying an ETF and they hold physical uranium and purchase physical uranium and take it off the market and store it in warehouses and whatnot. And so you're basically gaining direct exposure to the price of uranium. So if ultimately you look into the uranium thesis and you decide that this looks like something that will probably go up, then the easiest way to play it and safest way to play it is just buy the commodity itself. Just buy physical uranium through the Sprott Physical Uranium Trust. And if for those who do want to get into the weeds and look at individual companies, I think the sweet spot right now is developers who have a clear pathway towards production. I think that's where you want to be. I think that's where the biggest re-rating to the upside exists, without an incredible amount of risk that you take on when you go into the exploration space. So that's kind of my overall assessment right now.
You mentioned a different radioactive metal that's not ready for a long time, which made me think of asking this. If that's not ready, what about plutonium? Is that an option also?
No, it's not an option. It might be an option in 20 years, something like that. You gotta, like, people gotta recognize out there that nuclear reactors are built for uranium as a fuel input. Okay. And that's what they all run on. So to get to a future where we're dealing with plutonium or thorium or any other sort of element, generally speaking, the expense associated with that is so massive. The amount of time required to switch over a reactor to running on plutonium, for example, it's very time consuming, and it's just not commercially viable at any point in the foreseeable future. I mean, like I said, 10, 20 years, who knows? And anything's possible. By the way, I'll put that same caveat on small modular reactors. A lot of people are looking at this and saying SMRs are going to be a big thing. They're going to power data centers. Now, SMRs, just like regular reactors, largely run on uranium. And so that would be very bullish for uranium demand, but it's the same situation. They're nowhere near being rolled out for full commercial adoption. I think that, we'll start to see trickles of it in 2030, early 20 to mid 2030s. And I think we could see a big, commercial rollout of SMRs all over the world by 2050, 2060. Something like that, maybe 2040 at the earliest. Maybe I'm being pessimistic, but the point is it doesn't matter, because we don't need SMR demand to put the price of uranium way higher than it is today. Any SMR demand that comes in, I don't even consider as part of the supply demand projections. So it's basically icing on the cake. So if you're bullish on SMRs, great, but I don't think they'll be impacting the demand side anytime soon. And plutonium, thorium, all these things, someday, maybe, and maybe it'll be great, and maybe there'll be great investments, but that's not within my time horizon.
Thank you. I appreciate that. Canada and the U.S. have an enormous supply of many, if not all, of the metals and minerals. However, mining has one major limitation. We don't have enough or any refining. This leaves us vulnerable to getting refined material from China and other places. How do you think this will affect us currently? And if we go deeper into a physical conflict with Iran, do you think that we can get a refining industry up and running quickly, or are we too late?
Too late. First of all. Second of all, it's not only the refining, it's a lot of the red tape and regulation that exists. So not only is there very little refining capacity, there's, especially if we look at Canada, the amount of regulation, the industry is massively over-regulated. So you want to bring a mine into production 10, 20 plus years. So how are you going to do that? It's a tough situation to be in. I think that when it comes to refining, we're nowhere near there. These things require, we're talking billions and billions of dollars of capex and years, if not decades, to bring this sort of refining capacity online and processing capacity online. And unfortunately, we've relied on China for a very long time to do all of this for us. True. And they now, China's been very strategic and looked at the long-term vision, and they now control a massive amount of the refining and processing of various minerals. It's insane how much they actually control in the world. We've seen the same in regards to uranium. when it comes to conversion and enrichment, Russia is kind of the main source, because you can't just take uranium out of the ground and put it in a reactor. Outside of a few, they're called can-do reactors. Those you can just put a yellow cake into and they run on that. But that's a very small percentage of reactors around the world. Uranium needs to go through a conversion and enrichment process. And this is a highly specialized field that requires highly skilled people and very special machinery and factories. And we just don't have it in the West. And so now the U.S. has talked about, banning the purchase of uranium that's gone through conversion and enrichment in Russia. That's also obviously a problem as well. So I don't see this problem getting solved anytime soon. Now, one interesting thing to think about is that I anticipate that the Democrats are going to sweep the midterm elections. And as I talk about politics, guys, I hate all politicians and political parties, just so people out there understand what my stance is. But I do believe the Democrats are going to sweep the midterm elections, and I do believe we will see a Democrat president in 2028. And so what does that do? Now, the negative side of that is they could simply erase everything that Trump and the Trump administration has established in regards to what they're trying to do to incentivize domestic production and incentivize any sort of refining or processing, because we know that people on the left in general tend to be much more focused on environmental issues. So a Gavin Newsom, or God forbid an AOC becomes president in 2028, and they suddenly start talking about no more mines, we need to stop this is sacred land, all of the song and dance that they normally do. And then you're in a different position. And then maybe they reestablish a relationship with China and they start just continuing to use China's. So that could kind of be a strange positive in a way, if they could actually reestablish a positive relationship with China. So there's so many moving parts here that it's hard to see where things are headed. But I think that for the time being, I would encourage whatever politicians in power in the United States to play nice with China for the time being and try to establish some sort of positive trade relationship so that you can continue to enjoy their refining and processing capacity, because it simply doesn't exist, and the time and money that it takes to bring new ones online. And meanwhile, you're bombing Iran, and that's costing $900 million a day. It's estimated to, and you're entangled in all of these conflicts all over the world. That's also a huge detriment. That massively takes away from the possibility of just focusing on America first and getting these refining and processing facilities built, getting domestic production of these critical minerals online. That's where the focus should be, building nuclear reactors. I mean, I think John Polemy, who I follow and I think is one of the smartest guys in the space, he said it best. He said, Trump should be out there building nuclear reactors, getting in front of the camera and saying, we're turning America into a nuclear nation. We're going 100% on, domestic sourced uranium. We're putting shovels in the ground right now. I mean, this is what politicians should be doing, not talking about war with Iran and bombing. It's completely insane. So that's a massive detriment as well. So politics is often a dichotomy of just, interests that completely do not gel with each other. And so on one hand, you're talking about bringing on all this, refining or processing capacity, encouraging domestic production. And then on the other hand, you're spending like 24 hours a day bombing Iran, and that becomes the focus of everything. And it's just, it doesn't work. America needs to settle down and focus on its own domestic issues. And by the way, Canada, my home country, is in just as big of a mess for a different reason, which is that the liberal government that is in now also, like I said, leftists tend to be very environmentalist. And that's what's happening in Canada. That's why not enough pipelines are being built. That's why we just imported a bunch of LNG from Australia, despite being one of the most energy-rich countries in the world. The priorities are completely backwards. So we've got problems in a lot of Western nations right now, UK, EU. I mean, the list goes on, and they're not focusing on the priorities that they should be. And I think that's a big problem. So it's not a US and Canada specific problem. It's a Western problem. And we need some people in power who are just going to focus on their countries and get these minerals extracted. And by the way, that would cause a massive boost to their economies, create a whole bunch of jobs. But that's not where the focus is right now. It's the focus isn't there enough. And so my hope is that will change.
Yeah, it makes more sense to bring more things domestic. That way you're not spending as much on other countries getting it to you. You can do it yourself.
Exactly.
Currently, the US dollar is pretty much the world reserve currency. However, it looks like it's losing steam against the BRICS nations, especially when you consider that China and other countries are exchanging oil and who knows what else using gold as money. Do you see gold becoming the new reserve currency, replacing the petrodollar? And how will that affect not only the US dollar as world reserve currency, but also transactions for the rest of the world over time?
I think that if gold is to return as a reserve currency, it's a pretty far ways off, because I could see it being used more for international trade between nations, BRICS member states, to circumvent the dollar. I could see them eventually implementing a system which uses a currency that has gold backing to some extent. China's rolling out its yuan-based payment system, CIPS. Supposedly they've connected it to a bunch of countries already. There is rumors swirling that gold could be involved in part of backing that. But you need to have gold, tokenized gold, really, to make all of this work, because we're not going to see a world where people are walking around with gold coins in their pocket and paying for stuff. And then you need to have these little fractional slivers of gold, and then you're carrying it around, which is a security issue. It just doesn't work from a fundamental logistical standpoint. So you need to tokenize gold. You need to have, your credit card connected to a gold vault, which some companies do. The adoption is so small right now, but that's an option that could possibly be implemented at some point in the future. I see gold's role as money more of an insurance policy for countries to remove their wealth from counterparty risk, prevent themselves from having their assets seized, as what happened with Russia after the conflict with Ukraine began. And people looked at that, governments looked at that and said, hey, who's next? We could be next on America's bad guy list. Who knows, right? At this point. So we need to have our own neutral reserve asset that cannot be seized outside of a direct boots on the ground military invasion. And so that's the main role I see as gold up ahead, a store of wealth and a protector of purchasing power, more than an actual money that can be transacted. I think that we could enter that world at some point, but if it happened, I think it would require the complete collapse of the current political system, because the current political system runs on grift and campaign contributions, bribery, extortion, all of these sorts of things. And that's like literally the lifeblood of the current political system in most parts of the world today. And so the people who are in power in that system don't want sound, honest money circulating. That's the last thing they want. So the other word of caution I would give, and actually I interviewed G. Edward Griffin, who wrote The Creature from Jekyll Island, a famous book about the creation of the Federal Reserve and all the problems it's caused. He warned, watch out if a government comes out and starts talking about a gold-backed stable coin or any sort of gold-backed money, because the only way they would do that is if they were forced to by the citizenry or by circumstances, and you can be sure that it would not truly be gold-backed, or at the beginning it would, but slowly over time they would figure out a way to remove the gold backing to a certain extent and debase that currency as well. And so if a government's talking about gold backing, you have to be extraordinarily cautious. So I would leave people with that.
Which makes absolute sense, because if you look at multiple governments over a history of 6,000 years, debasing has always happened. Moving the citizens to tokens. And let's face it, the dollar is only a token of a debt.
Yes.
So the moving us always to tokens instead of sound money has always been man's way, government's way. So I think that the author that you'd mentioned hit the nose on the head.
Yeah, absolutely.
I want to briefly touch on the expat community of which you have joined. Certainly things seem to be getting more difficult both in the US and in Canada. And I want the viewers to go see your channel, especially your most recent videos you did about your reasons to become an expat. I'll include it in the video and in the description below. Viewers, please feel free to comment below. How do you think becoming an expat affects one's finances and stacking strategy?
So I'll first mention that I think the video you're referring to is called The Collapse of Canada and How to Get Out. It was a presentation I gave at the Vancouver Resource Investment Conference in late January this year. It was a standing room only presentation. That's how interested people were in hearing about how to get out of Canada. And they didn't come to see me. 90% of the people in that room didn't even know who I was. They just saw the title of the presentation and they just showed up in droves. And after I gave the presentation, I was surrounded by people asking me all sorts of questions on strategies for getting out of Canada. So that gave me some hope as to the fact that some people are waking up to what's actually going on. But in terms of how it affects finances, it's dramatic because we often get taxed to an insane extent in the West. And I don't know much about America's tax system. The issue with America is, unfortunately, it's one of the only nations where you're taxed globally. So there's kind of no way out for Americans unless you move to Puerto Rico. That's the only place, I believe, in the world where you can kind of get a lowered tax rate. And yeah, that's the video there, the collapse of Canada. So, but aside from taxes, for those who are able to become non-residents of their country and remove their tax obligations to their native country, which you still can do in Canada and most places in the world, you can get incredibly more favorable tax rates moving to developing nations. You got to look at it as game theory. As these mainstream Western nations get more and more authoritarian and start putting in higher taxes, inflation rises, more rules and regulations to stifle business and entrepreneurship. The developing nations, who are traditionally, much less economically well off, are incentivized to try to attract all of these people who are leaving these legacy brand Western countries to try to find a better way of life. And so you get situations like here where I live in Serbia, where they actually softened immigration laws and made it easier. Previously, you had to get a 1-year residence permit here and renew it every year. And then after 5 years, you would be eligible for permanent residence. Well, they recently changed it 1 or 2 years ago to they give you a 3-year residence permit immediately and you get permanent residence after 3 years. So basically, it's a one and done. You just go and get your 3-year residence permit and then let those 3 years pass. And then you go and apply for your permanent resident. And now you're a permanent resident of the country. It's one of the best deals that exists in Europe, but a lot of different countries have setups like this. You can get permanent residence through real estate purchase in many places, through investment, through straight up paying a fee, and that can vary depending on which country it is. You can get a residence permit through starting a business or being an entrepreneur. And there's a lot of different ways in many of these developing nations to get a residence permit and enjoy a much lower cost of living and a much lower tax rate, which of course translates into increased savings. And then you have more money to deploy into investment opportunities, whether that be stocks, bonds, or stacking. So I would say those are the main benefits financially. And there's a whole other host when it comes to personal freedoms. I mean, if you're into the concept that, a man is a man and a woman is a woman, and you like family values, then a place like Eastern Europe and many places in Southeast Asia and South America are great places to be. If you're interested in your own safety and you don't want to be subject to violent crime, then Eastern Europe is probably the safest place in the world. So is Southeast Asia. And many places in Latin America are the same. Latin America gets a little bit more sketchy depending on where you are, but you can enjoy greater safety, traditional family values, and a much lower cost of living. Of course, the caveat there is that you have to be set up to be making a Western salary to really take advantage, because wages are very low in these countries. So you can't just move to a developing nation and try to get a job there and then think that you're going to be good, because it's basically this, you'll just be stuck in the same situation. Although you'll have more personal freedom and you'll have those family values still, but you kind of need to either start a business that you can run from the country you're moving to, or you need to be an independent contractor working online, or you need to have already amassed a large amount of wealth and you're an investor or something like that. Basically, you need to be self-sufficient, but be making a Western level salary, and then you'll be able to live tremendously well in many of these countries.
That's good to know. And you'll have extra to stack as you see fit.
Yes.
Which on a future episode, I'd like to talk about that, plus things like VAT taxes and how that will interact with it. But that'll be for a different program. As we are preparing to close, would you like to tell the viewers more about your channel and where they can find you and what is coming in the near future?
Yeah, Commodity Culture. You can search it on YouTube. We're almost at 130,000 subscribers now. We focus on sound money principles, commodities markets, and geopolitics with the goal of making the viewers a better investor in the commodities sector. As to what's coming up, there's a few documentaries in the works. My channel started as a documentary channel. Now I do mostly interviews, but I've got a couple documentaries coming up, so people can look forward to that. And of course, continuing to get some great guests on the show. Lynette Zhang is coming up. I know you've had her on your channel as well. She's my next guest who will be on the channel. I've got Eric Young, who's a very astute expert from Hong Kong on the precious metals sector, and a variety of other great guests lined up. So I hope people will follow along and subscribe to the channel.
I certainly hope so. I've seen Eric on a couple other programs. I'm looking forward to seeing him on yours. Maybe someday, instead of just interviewing King Kong, maybe you'll interview a tiger. Well, everyone, thank you all for coming. And thank you, Jesse, for being my guest on Tiger Stacker.
It's always a pleasure, and I'm happy to come back anytime.
I would love that. I do recommend that everyone go to Commodity Culture on a regular basis because his interviews are very insightful and spot on. Again, thank you, Jesse.
Thank you.
Tiger Stacker out.